Hey there! Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge, explanation, and news updating daily.
Let's chat about the latest in Bitcoin and the crypto world. So, we've just wrapped up the 4th Bitcoin halving, and it's a big deal. People have lots of questions, especially about how it might shake up prices. The CIO of Bitwise has some cool insights on this, predicting some interesting market moves. On top of that, there's been a buzz about some geopolitical drama that might have stirred the pot in the crypto market. But turns out, it might not be all that it seemed. And despite a rough week for Bitcoin's cash flow, we might just see a positive flip today. In short, we're keeping an eye on Bitcoin post-halving, expert takes on what's next, the broader market vibes considering the latest news, and the ebb and flow of investments. It's all about staying in the know on where crypto's headed. Hey folks, so you've just witnessed a slice of Bitcoin history with the latest halving event. If it's your first time seeing this, congrats. It's like we've all just stamped our presence in the grand timeline of Bitcoin, right here in 2024. It's a moment we'll look back on, just like we reminisce about the 2016 and 2020 halvings. Now let's talk cycles. We're in a fresh one post-halving, and if history's any guide, we're in for some lively times ahead. Sure, the price didn't do a victory dance on halving day. It was pretty chill, actually. But hey, it did nudge up a bit, even if yesterday's news about Israel and Iran might have added some spice to the mix. Long term is where it's at, my friends. Don't sweat the daily ups and downs, it's all about where we're heading in the grand scheme. And that's what Matt Hogan from Bitwise is hinting at too. The halving day's quiet, but that's by design. It's the starting gun for the marathon, not a sprint. So let's lace up and see where this new cycle takes us. All right, let's dive into the Bitcoin saga with a bit of a chat. Picture this. Back in the first halving, Bitcoin was just a baby at $12. Fast forward 4 years to 2016, and it's taken its first steps up to $660. Come 2020, it's running at $9,000. And today, it's a full-blown sprinter, breaking the tape at a whopping $64,000. Now, if you zoom out, you'll see Bitcoin's growth is nothing short of astonishing. It's like every 4 years it hits the gym and bulks up big time. And the best part? Historically, if you'd bet on Bitcoin over any 4-year stretch, you'd be sitting pretty. But here's the kicker. Despite the gains, not everyone's popping champagne. Why? Because the crypto market is a roller coaster, playing with our emotions like a pro. Take 2022, for example. Bitcoin was at $15,000, and it felt like we were stuck in a never-ending loop of bad news. Just when we thought we'd hit rock bottom, the floor gave out again. It's like the market was testing us, seeing who had the guts to hang on. But for those who did, for those who weathered the storm and kept the faith through the tough times, they're the ones grinning now. We've seen Bitcoin hit new heights right before this halving, just a few weeks back. It's a testament to the believers, the hodlers, the ones who stuck around. And here's the thing about halvings. The real party starts about 6 to 8 months later. That's when the supply cut really kicks in, stirring up the market demand and sending prices on a joyride. History tells us we're in for some wild times ahead. But this time it's different. We've already seen a new peak before the halving, something unheard of in Bitcoin's past. And that $64,000 price tag? It's a giant leap from the previous cycles. Think about it. In 2020, the halving price was $9,000, and the cycle's peak was around $19,000. Now, we're soaring way above that, with pre-halving prices doubling the last cycle's high. And yet, the buzz isn't quite there yet. Sure, my video views and interactions are up from last year, but they're not touching the frenzy of 2021. So what's it going to take? I reckon we might just have to wait until Bitcoin hits that magical $100,000 mark. That's when the world will sit up and take notice, and the market will truly come alive. That's my 2 cents, but what do you think? Drop a comment and let's chat. And it was a pretty big deal. And this time, It wasn't just the crypto crowd tuning in. We had folks from every corner of the globe, even U.S. senators like Cynthia Lummis, getting in on the action. Can you believe it? A few years back, who would have thought we'd have senators celebrating Bitcoin Halving Day? And the media? They were all over it. Big names like Fox Business had special segments just for the halving. Even CNBC's homepage was decked out with Bitcoin halving headlines. It's like Bitcoin's become the new celebrity everyone wants to know about. Sure, not everyone's buying in yet, but the curiosity? It's through the roof. Over in the stock market, the Nasdaq had a Bitcoin mining company ringing the closing bell. Talk about mainstream acceptance. And let's not forget the crypto celebs like Binance CEO Richard Tang, who were hyping up how this halving was extra special with all the new developments like Bitcoin spot ETFs. It's a whole new era for Bitcoin and crypto, and the energy is just buzzing. Even on the tough days when the market's throwing punches, there's always something new popping up, keeping things exciting. It's like waking up not knowing what the day will bring. And that's the thrill of it. We're stepping into uncharted territory, and I gotta say, it's pretty exhilarating. So, what do you think about all this? Comment below. So, crystal clear, investing in Bitcoin? It's not about luck. It's a marathon, not a sprint. Over the past 15 years, Bitcoin's been on a steady climb, proving it's not just a fluke. It's like gold or stocks. People invest for the long haul, hoping the value goes up. When the market's down, the true believers are the ones quietly stacking up more Bitcoin, not scared off by the dips. And history's on their side. After every halving, the price jumps up. It's all about scarcity and demand. So, forget about short-term wins. It's the long game that counts. Think about it. Who's asking about Bitcoin in 2030? Not many. Most are looking for quick gains. But if you take a step back, you'll see it's the long-term vision that really pays off. That's the real deal with Bitcoin investment. Keep that in mind, and you're golden. So M. Hogan from Bitwise is weighing in on whether the big event is baked into Bitcoin's price yet. It's like everyone's asking, is the halving's impact already in the $63,000 price tag we saw this morning? Or is it still to come? Here's the deal. There's this thing called the efficient market hypothesis, which basically says that prices reflect all known info. Since the halving is no secret, it's likely that the price has already adjusted for it. But here's the twist. The market doesn't have a crystal ball. It can't predict the future perfectly. It's all educated guesses about what Bitcoin will need down the road, and those guesses could be spot on or way off. Now think about selling your house. If you're in a rush because you've lost your job, you're a forced seller, and you'll probably take a lower offer. But if you're selling because you want to, not because you have to, you'll hold out for a better price. That's the difference between miners who sell Bitcoin to cover costs and folks who sell when they think the time's right. Post-halving, miners are only churning out half the Bitcoin they used to, so if demand stays steady, the rest has to come from those willing sellers. And if they're not in a hurry, they might just ask for more dough. So, what's the bottom line? The halving shakes up the game by changing who's selling. Miners have less to sell, and that could mean prices go up if buyers keep buying. It's like a game of musical chairs with Bitcoin, and nobody wants to be left without a seat when the music stops. That's what makes the halving so darn interesting. It's not just about what we know, it's about what we don't know yet. And that, my friends, is where the real fun begins. M. Hogan from Bitwise is looking at the Bitcoin halving and scratching his head, wondering if the market's got it right. Everyone's asking if the halving hype is already counted in today's price or if there's more to come. So, here's the scoop. There's this brainy concept called the efficient market hypothesis that says prices should reflect everything we know. Since the halving is old news, it's probably baked into Bitcoin's current price tag. But the future? That's still a big question mark. The market's making guesses on how much Bitcoin will need tomorrow, next month, next year, and it could totally miss the mark. Now imagine you're selling your house. If you've got to sell it fast because you're out of a job, you're a forced seller, right? You'll take what you can get. But if you're chilling, not in a rush, you'll wait for a sweet offer. That's like our Bitcoin miners who have to sell to keep the lights on versus the hodlers who sell when they feel like it. After the halving, miners are putting out less Bitcoin. So if demand stays the same, those chill sellers are in the driver's seat. They can crank up the price because, hey, they're not desperate. And with things like Bitcoin spot ETFs needing to buy, they'll have to sweet-talk those hodlers into selling. Hogan's betting that the market's undervaluing Bitcoin's long-term thirst. He's digging the idea that the real demand will come from those who aren't under the gun to sell. Fast forward to the future, and he sees a market where demand keeps climbing. But the supply from miners has taken a nosedive. That means buyers will have to convince the hodlers to part with their precious Bitcoin, likely leading to price hikes. In the end, Hogan's vibe is that the halving is more than just a blip on the radar. It's a game changer that could make the market sizzle, especially once everyone realizes there's less Bitcoin to go around and still so many people wanting in. It's all about playing the long game, and those who do might just find themselves sitting on a gold mine. That's the long and short of it. Bitcoin's future is looking bright, and the halving might just be the spark that lights the fire. So, you know how everyone's been on edge with the whole Israel-Iran situation? Well, despite the roller coaster of news, Bitcoin's price actually went up by about 23% from yesterday. Crazy, right? At first, ABC News was all over this story about Israel attacking Iran. But then, out of nowhere, they're like, nope, no attack. Talk about mixed signals. But then, bam, we get the scoop that there was an attack, just a small one. Now, here's the kicker. Even with all this back and forth, the big brains in the investment world seem to take it all in stride. They're not looking for drama, and the market's thumbs up was pretty clear. And Bitcoin? It did a quick bounce back, jumping from $59,600 to a cool $63,671. While we were all catching Z's last night, it seems like Bitcoin was busy climbing back up. So, what's the takeaway? It looks like even when geopolitics shake things up, the market's got a mind of its own, and Bitcoin's not too shabby at weathering the storm. Just goes to show, stability's the name of the game, and investors are all about keeping things chill. About Tether and the whole stablecoin scene. So, Tether's been busy printing more USDT, like 1 billion more. It's like they've got a money printer going brr, right? And here's the deal. As long as Tether keeps pumping out USDT, the crypto crowd sleeps like babies. It's all about that peace of mind, knowing there's a cushion to fall back on. But hey, if Tether and its buddy USDC ever hit the brakes on printing new coins, that's when folks start biting their nails. Nobody wants to see the market take a nosedive. Thankfully, Tether's still in the game, churning out those digital dollars. And you know what? The market's eating it up. Every time Tether hits print, it's like a green light for investors. They see it, and they think, all right, things are still cool. It's all about keeping that confidence up. Plus, when Tether's on a roll, you can bet Bitcoin and the gang get a nice little boost. It's like a ripple effect. Tether prints, and boom, crypto prices get a lift. So what's the bottom line? Tether's printing spree is like a security blanket for the market. It keeps things steady and reassures everyone that the crypto world isn't about to flip upside down. As long as those USDTs keep coming, it's smooth sailing for traders and hodlers alike. Guess what? The crypto market's on a roll again. The total value just jumped up by 2.6% to a whopping $2.5 trillion. Bitcoin and Ethereum are leading the charge, both up by about 5%. It's like the whole market's caught a wave of green. Prices are climbing across the board. Talk about a good day for our digital wallets, huh? Did you catch the NVIDIA drama? Their stock took a 20% nosedive after Jim Cramer hyped up their CEO, Jensen Huang, as this era's Da Vinci, a real Renaissance man. This all went down after a post on March 18th, and since then, NVIDIA's value has shrunk by a massive $400 billion. That's the Cramer effect for you. His words can really shake up the market. Michael Saylor, the big boss at MicroStrategy, has been playing a high-stakes game of Monopoly. This year alone, he's cashed out a cool $370 million in company stock. But here's the twist. While he's been selling, MicroStrategy's stock has been on a wild ride, skyrocketing over 90%. It's even outpaced Bitcoin, which is saying something. Now, since last year, the stock's been on a tear, ballooning by 346%. That's why Saylor's phone is probably buzzing non-stop with people wanting to throw money at him. The guy's got a Midas touch, especially with Bitcoin. He's been scooping up Bitcoin like it's going out of style, and the rumor mill says he's selling stock to buy even more. So what's the deal? Saylor's moves are making waves. He's betting big on Bitcoin, and it's not just chump change. We're talking big bucks, and it's turning heads. MicroStrategy's stock is flying high, and Saylor's Bitcoin shopping spree doesn't seem to be slowing down. It's a bold strategy, and so far, it's paying off big time. So, get this. The IMF, the big financial honchos, just dropped a study that's got everyone talking. They're weighing in on Bitcoin, and it's not all doom and gloom like before. They're actually giving it a serious look-see for sending money across borders. It's not a full 180, but hey, it's something, right? A few years back, they were all, Bitcoin's a scam. It's for crooks. It's gonna wreck the world. But now, they're singing a different tune. They've got a clip floating around where one of their top brass is talking about managing Bitcoin, not trashing it. It's like they're finally admitting it's not just some con artist trick. In their paper, they're all about figuring out what role Bitcoin plays in international money transfers. Sure, it's got its ups and downs, but the fact that they're not just writing it off as criminal is huge. It's like the IMF has no choice but to get on board with Bitcoin. They can't kill it, so they might as well figure out how to deal with it. Talk about a reluctant nod of approval, huh? So, Thorchain is making some serious moves. They're rolling out the red carpet for USDT on April 20th. That's like tomorrow. And they're not stopping there. They've got this shiny gold-backed coin, XAUT, joining the party in a few months. It's like Thorchain is throwing its own crypto bash and everyone's invited. Now, this isn't just any old network. Thorchain's coin is already rubbing elbows with the top 10 big players in the market. Remember Telegram's grand plan for their own crypto, the TON? Well, the SEC threw a wrench in that, but the crypto community said, "No way, we're not giving up." They grabbed the code, gave it a makeover, and voila, Thorchain was born. And guess what? It's all cozy with Telegram now. You can use their coin to buy ads or pay for channels with ads right there on the app. It's like Thorchain is the new cool kid on the block, and it's making friends left and right. So, keep your eyes peeled. Thorchain is on the rise, and it's shaking things up in the crypto world. So, HSBC is stepping up its game in the digital world. They're not just any bank. They're like the cool, tech-savvy uncle who's finally getting into the latest gadgets. They've decided to jump on the tokenization train, starting with gold and bonds. It's like they're turning these old-school assets into digital gold coins and bond tokens that you can move around the world with just a click. Pretty neat, huh? Now, Noel Quinn, the big boss over at HSBC, is pretty chuffed about this whole tokenization thing. He's all about making transactions more efficient and cutting down on costs. It's like he's found a way to make the banking world a little less stuffy and a lot more modern. But here's the catch. They're keeping mum about which blockchain platform they're using. It's like a secret recipe they don't want to share. They've even rolled out this new tokenized gold product, which is a first in Hong Kong. Yet they're playing it coy with crypto, saying they want to keep their distance. It's a bit of a head-scratcher, right? Especially when you think about how other big names like BlackRock are diving into Ethereum's network. And get this, despite HSBC's keep away from crypto mantra, they've had their own run-ins with money laundering in the past. It's like they're saying one thing but doing another. So what's the deal? Are they anti-crypto or are they just playing hard to get? It's all a bit of a mystery, but one thing's for sure. HSBC is making moves. and we're all watching to see what happens next. So, you've heard about BlackRock, right? They're like the heavyweight champion of the investment world. And guess what? They've got this Bitcoin spot ETF that's taking the market by storm. It's like a magnet for cash. It's pulled in 24% of the dough across their 1,000 global ETFs. That's not just pocket change. We're talking a serious chunk of change. But hold on, it gets even better in the US. Over there, this Bitcoin ETF is hogging 37% of the inflow among BlackRock's 421 ETFs. It's like 1/3 of all the new money pouring into BlackRock's American ETFs is saying, "Hello, Bitcoin." And here's the kicker. This isn't just another fund for BlackRock. Oh no, this is a big deal. It's like the crown jewel in their fund family. Larry Fink, the head honcho at BlackRock, isn't just playing around with crypto. He's making a statement that Bitcoin's not just a sideshow. It's main stage, center spotlight. So, what's the lowdown? BlackRock's Bitcoin Spot ETF is more than just a fad. It's a major player, and it's reshaping how the big guns view crypto. It's not just about diversification. It's about leading the charge into the future of finance. And everyone's watching to see what BlackRock does next. About ETF, today's financial scene is buzzing with a net positive cash flow of $30 million. The sell-off from Scale is just a drop in the bucket at $45 million, and HLE Vanx's $1.8 million is barely a blip on the radar. The big news is FI's comeback with a $54 million infusion, and AR Invest and CBitWise chipping in $12 million and $5 million respectively. Now, all eyes are on BlackRock, the usual frontrunner in releasing their figures. And bingo, they've just thrown in a cool $30 million, bumping our total positive flow to a sweet $60 million. Despite a rough week, we're wrapping up this Friday on a high note with a solid influx of funds.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.